Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 2nd of December. Starting off with the FTSE 100, which looks like it's revving up for a Christmas rally or Christmas jollity at least. We've got a mid-move consolidation here, either side of the 9,700, 9,750 range, which was kind of expected. RSI in the upper 50s, which is perfect for a new leg to the upside, and we're looking for 10,000 maybe as a magic number for the end of the year. Obviously, we haven't got that much time left, but either the end of the year, early in the new year. And we're looking for that while we're above, certainly while we're above the 96.90 area, which is recent 3-day support for this market. Slight RSI 50 plus rebound there, little kink in the RSI trace as well, helping us take the view that we're heading to 10,000. The other thing to note, of course, is that we have the 50-day line 95.73. There is a rug pull. That's the lowest we're expecting this market to go. And then, as has been the case since the beginning of May, any dips to the 50-day line have been buy opportunities. Moving along to the DAX rather, and here you can see that we bounced above the 200-day line. That's rising there, so that's a positive. RSI back above 50, which is also positive. Looking for the 50-day line initially at 23,900 as a target over the next couple of days. Ideally, we get a break of 24,300 by the end of the week and head to the top of the rising trend channel as high as 26,300 by the end of the month. That is the top of a rising April trend channel. This stage, the worst that is expected is 23,100, which is the floor of the channel. The Dow is next, and here the picture is that of a market which is sort of pulled back a bit from recent highs, but obviously we are at or near record levels. Top of the channel there, 49,000 to chase. Well, basically that's the level to chase by the end of this month, and we're looking at that certainly while we're above the 50-day line, 46,700. Worst case is that we have to test the floor of that channel from February. And it's a June uptrend line there at 46,000, but not expecting that at the moment, even though yesterday's failure was not a great look. Moving on to the cryptos, and first one up is Bitcoin, and here you can see that had a failure below that resistance line there from last month. We're also failing below that tentative support line there. That's now at 87,000, but below 87,000 with the risk of a test of 80,000 again, especially given the way that we failed so badly to get back above the old 93,000 support from April and May. Ethereum is next, and here you can see that we really did fail at that October line. Interesting that as soon as it was drawn, the market failed at it, but hopefully there may be a double bottom or a higher low put in versus 26.22, the November support so far. Yesterday's low, 27.19, but still need to break that line there from October. Probably that's the best thing to go for. 29.20 is a level there, so an end of day close through that, or an end of day close through the RSI line, resistance line there from July at around the 40 level are the two triggers for people to go long. Otherwise, we could be looking at something rather more serious down towards 2,000. If there is a break of that resistance line from October, then we're looking at the area of the 50 and 200-day moving averages at 3,500, even if we fail again after that. Gold is next, and here we've got a situation where we managed to push through that resistance line there from back in October, that level there around 41.60 or 41.50, let's go for that, and above that looking for 4,600. Perhaps by the end of this month is pushing it, but by the end of next month, more realistic, especially while we're above the 50-day line, 40.39. Moving along to the stocks, and starting off with the stock, which you would have thought its ticker code would be, or epic code would be Boo, but it is in fact Debs, not quite so glamorous. Here we've got a V-shaped bull flag there. We bounced off the previous target there, the resistance line at 21 pence. Above that, looking for 40 pence. As soon as the end of next month, I'm not sure what would do that, but I suppose the company has been making noises about recovery. On to Cobra Resources, and here no follow through yet from yesterday's or the rallies of the last 2 days, but looking for this market to break the old October resistance, 4.8 pence. Above that, looking for as much as 7.8 pence by the end of next month. 50 and 200-day lines both rising now, which is a good sign. They're rising in parallel, especially the 50-day line. You can see that last 2 days, shares open at the low, close at the high, which is a show of strength. Moving on to E-Star, and here we're Having a pause for breath near the top of the rising trend channel, you could argue it's slightly higher than what I've drawn. Maybe around up to 3p, above 3p, looking for 4p, and perhaps as soon as the end of this month, while we remain above 2.5p, yesterday's trading range midpoint. Ferrexpo is next, and it serves not only as an iron ore pellet company, but also as a barometer for peace in the Ukraine. Here we had a breakout through the mid-move consolidation, which was around 76p, above 76p, looking for the upper parallel of that rising trend channel, which that was the target previously, 65p. So looking for as high as 93p. Obviously, if there really is peace in our time, then there's quite a long way to go on the upside. The shares were trading around from memory, around £2.50 at the time of when the tanks rolled in at the first time in February 22. In fact, towards the £2 level at least on that one. Moving along to a stock which is perhaps not quite so dramatic, and it is Greenroc. Here you can see that we've had a bull flag resting on a rising 50-day line, so that looks bullish, and it looks like a mid-move consolidation, higher an RSI 50 plus rebound, so above the 50-day line at 2.6, looking for up to 4.2p by the end of next month. Once again, not quite sure what will do that, but that's the setup at the moment. Next on the list is a situation which hopefully will have some legs over the near term, or as it already has, and it comes in the form of Hydrogen Utopia. Another RNS from the company today seems to be well embedded in Saudi Arabia, about as well embedded as Cristiano Ronaldo is at the moment, and maybe similar figures may emanate as well. Here we were looking for 5p once we broke that resistance line at 2.5p, and you can see the shares heading towards that hopefully in coming days. Above 5p, not really much on the chart, between 5 and up to 10 to 12p, so hopefully the stock will deliver the goods. We're obviously already up a long way in the recent past. We had the multiple RSI 50 rebounds in October above a rising 50-day line, which was the first signal. Now we've had a gap through resistance, which is the second big target, big signal there. 50 and 200-day lines are both rising sharply. The only thing to note maybe at the moment is to see if we can get a quick end-of-day close through the June peak at 4.2p. That's, I suppose, the next challenge for the bulls. On to Jangada, and here pushing towards our target there. You can see the target line there up to looks like 2.25, and we're looking for that hopefully by the end of the week. Above that, maybe scratching our heads in terms of what might come next, but it does look as though we'd get the old support there from 2022 around the 3p mark as the target once the 2.25p level has been hit. Moving along to Mkango, which seems to be delivering a bit of a recovery here, basically bouncing off the old September resistance around the 40p zone, and the old August resistance as well. The only thing missing now at the moment is that we probably need to see a decent end-of-day close above the 50-day line there at 51p. In the meantime, we do have a potential gap target there at 49p from last month. So if you're aggressive, then an end-of-day close above 49 would be the trigger for an attempt at retesting the 60 to 65p area, which was resistance on the way down in the early part of last month. Metal exploration is next, and metals exploration to be precise. And here you can see rising trend channel, top of the channel there at 20p. We're looking for that by the end of next month, while we're above the old broken late October, early November resistance, especially while we're above the 50-day line, 12.9p. So above the 50-day line, 20p, hopefully on cue for metals exploration. Company which had a decent update to date, which I don't think anybody's heard of, and probably not many people are looking at, given the horrors of the left-hand side of the chart. But it does look as though Fomax, rather, getting it right, is a charting situation in the sense that we've had a gap down last month and a gap higher this month. At least while we're above the floor of the gap there at 6p, there's a chance of a move up towards the gap top there at 10p, but obviously it all hinges on today's price action. If we fill that gap, then it's back down to the bear market, which the shares have been in over the recent past. Moving along to the last few. First one is Sound Energy, which has delivered rather dynamic move. Here you can see that we've got the 50 and 200-day lines rising, going into a golden cross hopefully by the end of this month. In the meantime, the target there, 1.25 pence by the end of this month. Obviously, we've seen in the past that whenever there's a rally, the second day somebody decides to wet the bed and get out, but maybe this time will be different, especially given the 50 and 200-day line configurations there for the shares and the way that they were staying, building their latest spike above a rising 50-day line. So that normally is a leading indicator on the upside. Onto a stock which I don't think anybody looks at all, including the company itself, perhaps. Sanderson Design. Here we've got the potential of a rising trend channel base. Top of the channel there, heading for 60 pence if anyone's interested. And the reason for the inclusion is that we've got bullish divergence at lower lows for November, but the RSI trace actually a fraction higher. So let's see if the bullish divergence works and that we don't get any fresh break back below the price channel floor at 43 pence. Last stock of the day, and it wouldn't be the same without Valereum, is coming up, and here we're up another 7%. So it's been called correctly since October. We had the shares rising above a rising 50-day line, unfilled gap to the upside. It's a little bit like the hydrogen Utopia chart. Well, our initial target here was around 7.25, 7.75. Second was 14, and the last one is 27, which hopefully we'll get by the end of this month. And then one will worship the magic of technical analysis. Upside here valid certainly while we're above the 14 pence level. If you're trying to be tight on that, then maybe the old February support there around 18 pence would be the end of day close stop loss, but that would be a little tight. That's it from me today. More updates tomorrow.